The European Central Bank has plans for a big interest rate increase, keeping up the pace of its monetary tightening to contain inflation even as markets wobble. A markets analyst in Frankfurt called the move clever, saying it left European Central Bank open. The European Central Bank managed it very cleverly today. On the one hand, it continued to raise interest rates as planned, and by doing so, it documents that the European banking system is better positioned than the American one. We have much stricter, much stronger regulations, and on the other hand, it is leaving the door open by simply lowering the inflation forecasts and the growth forecasts. In other words, you can assume that any interest rate hike in Europe will be over by the summer. Yes, inflation. It will come down, but not to the 2% level. We can safely say goodbye to that. We won't make it. And I don't think the European Central Bank wants that at any cost, because we have a lot of problems. Over-indebtedness, an economy that needs a lot of debt to stay afloat. The states can no longer handle the debts, so the European Central Bank has to indirectly support the whole thing. That prohibits significant interest rate hikes. The collapse last week of Silicon Valley Bank in the U.S. has highlighted banks' vulnerabilities to sharply higher rates, while a rout in Credit Suisse shares added to market turmoil. The turbulence could strengthen the case for major central banks to slow the pace or pause of rate increases ahead. Inflation, the European Central Bank's primary responsibility, is far higher than in previous crises, and the European Central Bank's new projections published on Thursday put price growth above its 2% target through 2025, an overriding concern for many of its policymakers. Inflation is seen averaging 5.3% this year, 2.9% in 2024, and 2.1% in 2025, the European Central Bank said, adding that these projections were finalized before the current turmoil. The European Central Bank noted the bank was starting to see signs that its policy tightening was having an impact on the economy, notably through credit channels.